So today's the 2nd of January 2025. So happy new year. Today's the first trading day of the year. Yesterday obviously was a public holiday because it was New Year's Day. So I did a quick trade this morning. I wrote some naked call options over Telstra. And this morning it was trading at about $4, $4.03 or so. Now, my personal view, and I know I need to keep going over this every video because I want you to know that this is not financial advice. I'm not an advisor. I'm not a licensed financial planner or advisor. The videos that I'm creating are purely educational, purely factual based. It's just information based on my opinion and factual based on the trades that I've made and why I've made them. They're in no way, shape or form designed to tell you what to do with your money or how you should trade or whether you should even trade. These are purely just videos based on what I'm doing and why I did it. And hopefully if you get something out of it from an educational perspective, great. Comment, like, subscribe, but please know this is not financial advice. So I was looking at the chart of Telstra this morning at $4.03. My personal view is this has hit around this mark, around the $4 a few times, quite a few times, and it's kind of tried to hit it, bounce back, tried to hit it, bounce back, hit it, bounce back. So for me, this is kind of saying, $4 seems to be a little bit of a resistance barrier that Telstra's struggled in the past to get through. My personal view today, this morning, was if it struggled to get around and through this glass ceiling, it'll probably struggle again. So with that view, how can I make money from that? I decided if I don't expect that the price is going to continue up, why don't I sell some call options? Remembering a call option is simply giving somebody the right, but not the obligation, to buy Telstra shares from me for a certain price on or before a certain date. So let's say hypothetically I said, you can come and buy Telstra shares off me on or before the middle of February, February the 15th, for $4.50. My belief right now is you're not going to, because my view is Telstra's not going to make it to $4.50 or above. It's going to hit $4 and bounce back down. So my belief is in February, Telstra is going to be trading at less than $4. Hence, I'm going to write some $4 or above call options with the view that I'm going to get to pocket that money and not have to come good on the deal and deliver the Telstra shares, because I don't own Telstra shares, which makes this a naked call option, because a covered call, as the name suggests, is covered. If I owned 1,000 Telstra shares and wrote 1,000 options, or 10 options, which is the right to buy 1,000 shares from me, well, if I own the shares, all I'm doing is giving you the opportunity to buy those shares that I own off of me. But because I don't own Telstra, I'm essentially naked. I'm exposed. That means that if you come knocking on my door saying, hey, I want 1,000 Telstra shares and you promise to sell them to me for $4, well, if they're currently trading at $6, $7, $8, I literally have to go to the market and buy them at $8 to deliver to you for $4. Hence, it's naked. I'm exposed. I have to go and buy the shares at the market price. So what I did is I sold some call options that expire next month on the 20th of February with a strike price. Now this is interesting. The strike price is not $4, it's $3.91. And they were trading for bid and ask of 15.5 cents and 19.5 cents. Meaning if you just wanted to buy them right now, they're 19.5 cents. If you wanted to just sell them right now, there's somebody offering to pay 15.5 cents. So I thought I'd come in somewhere in the middle. Now the reason that it's $3.91 instead of $3.90 is because it's a European style option. What that means is, unlike an American style option where somebody can come and exercise their right to buy the Telstra shares off me at any time between now and the 20th of February, a European style option can only be traded at expiry on the 20th of February. So the reason I am going to sell some $3.91 European style options instead of American is because that buys me the time between now and expiration where the market can fluctuate as much as it likes, nobody can come and exercise their right to buy the shares from me in that time because they have to wait till settlement. So I jumped in to the order queue and said, I want to sell to open 10 contracts. Contract size being 100, so 10 times 100 is 1,000. So literally I'm saying somebody can come to me on the 20th of February and buy 1,000, 10, 100s, 1,000 Telstra shares from me for $3,910 or $3.91 per share. For that right today, the bid and ask is 15.5 cents and 19.5 cents. I said I'll come in somewhere in the middle at 17 cents, which is $170. Obviously 17 times 10 times 100, so 17 times 1,000 is $170, less the brokerage and commission costs of $34.95, and the exchange traded option contract fee of $1.43 will give me $133.62 right now, today, in my pocket. So I'm happy with that. I hit send to market. My order confirmation comes through. I look at my outstanding orders and I can see that it's in the market as of 12:41 p.m. That's Eastern Standard Time. I live in Western Australia, so that would have been 9:41 a.m. And I can see that at 9:41 a.m. I got the email confirmation letting me know that the order had gone to market. Hasn't been executed yet at 9:41, but certainly went to the market. I did a refresh on my orders and I noticed that there weren't any outstanding orders, which is an indication to me that the order has been filled. 2 minutes later, 9:43 a.m., I get a confirmation from CommSec that my order has been filled. They've sold 10 contracts for Telstra, $3.91 option expiring 20th of Feb for $170. After they take out their costs and brokerage, they are going to give me $133.62 into my account today. Well, actually tomorrow, because today's the 2nd, tomorrow's the 3rd. That's the settlement date. Let's have a quick look at the numbers and see how they add up. Basically, I have just been credited $133.62 into my account. Now, I have committed to sell to somebody Telstra shares for $3.91. And I've committed to sell them 1,000 of them, which means I'm going to get $3,910 if somebody comes and exercises their right to buy 1,000 Telstra shares from me. Now, take into consideration that if I am exercised, I get the $3,910, plus I've already got the $133 today. So that's a total of $4,043.62, which essentially means that if you take the $4,043, divide it by the 1,000 shares, that means if I am exercised, you can see that my actual break-even price is $4.03 per share, not $3.91, because I've collected the $133.62. If I'm exercised, someone will buy 1,000 Telstra shares off me for $3.91 per share, which of course is $3,910. But add to that the $133 I've already collected, takes it to $4,043. Divide that by the 1,000 shares is a break-even price of $4.03 per share. So, at expiration, this is the stock price, this is my potential profit and loss. Naked sold call options is a very high-risk strategy because you limit your upside potential, meaning the most I will ever make from this trade will be the $133.62. The most I can lose from this trade is unlimited. I mean, potentially this stock could go to $100 or more. So my potential risk is very high. So if we look at this payoff diagram, we can see that if the stock price finishes at $3.91 or below, that is where I make my most profit, which is at the $133.62. If the stock price falls somewhere between $3.91 and $4.03, obviously I will be exercised and I will need to buy the stock. So my total break even, where I finish neither in profit nor at a loss, is at $4.03, because that's how much I've been paid per share. That's how much I would have to pay to buy back the shares, minus, of course, brokerage and costs, so I would be at a slight loss. If the stock price rises above the $4, that's where I have to buy the stock back. And obviously the further away from the $4 break-even price, the bigger the loss. So I hope that makes sense. High risk strategy, selling naked call options, because obviously I only stand to make $133, whereas my downside risk is much higher, which is why I sold the European options rather than the American style options, so that I can at least manage my risk by keeping an eye on the trade close to the 20th of February. And bearing in mind, I've got until the 20th of February to worry about this being a naked position. If Telstra starts heading up and up and up, I can obviously roll up or roll out, buy these options back and sell a further month or a further strike or something. So keep watching, because I will create a video to show you whether this trade turned out to be profitable, whether I just got to keep the $130 and move on to my next trade, whether I had to deliver the shares, and if I did so at a loss or a small profit, whether I fixed a trade that was going wrong by rolling up, rolling out, closing out of the trade altogether. So subscribe, hit the bell notification so you'll get notified when I create another video, and I'll let you know how this trade goes. Thanks for watching.